So, gang, let's go over these currencies again with, Russia forces, taking over Ukraine nuclear plant site. So let's go over that again, with these currencies going up and down. We see oil go to an all-time high since May 2020. Since the beginning of this pandemic, we've seen euro go all the way down to an all-time high since May 2020, since the beginning of the pandemic, and we've seen gold last week go to an all-time high since May of this pandemic of 2020. So let's go over all this again. All right, gang.
Affected the essential equipment. They were the main takeaways from the IAEA this morning.
My main takeaway, John, was that the Russians were shooting at the firefighters, and there's a bunch of other reactors to come here across even to northwestern Ukraine, up by Belarus and Poland. I think it was a real lesson, perhaps, of what's to come in the coming days.
Futures down 0.9% on the S&P. That's the story in the US. Over in Germany and Frankfurt, the DAX down by even more. I mean, the euro breaking down through 110, 10988. But the moves we're seeing in the European banks, Tom, are something.
Well, they are. The banks are there, and again, I'm going to call it one big balance sheet adjustment. We'll dive into this data on this jobs day as we can. Joining us now with a terrific brief, Alan Ruskin, Chief International Strategist at Deutsche Bank, and they're a research combine of David Folkert's Landau that is writing piercing notes right now. Alan, I loved your adult note on geopolitical proximity. What are the proximities that Christine Lagarde faces in the coming days?
Well, I think, when you certainly look at it in the context of currencies, I think currencies are probably a useful way of viewing the world. There are a few things that most influence currencies at this point. One is obviously geography and, geopolitics. There's a humanitarian aspect to this, of course, that we should put top of the list, related. There's also a policy response, which means effectively easier monetary policy the closer you get to the conflict, and probably more fiscal stimulus, so change in the policy mix. And then, of course, you've got a terms of trade effect. So in Europe in particular, there's energy independence that we're all watching very, very closely. And that compares, of course, to some countries like the United States, like Canada, where there's much reduced energy dependence on Russia.
What have you learned about what you call the inflation overshoot? You harken back to Milton Friedman, you go all monetarist on us, Alan. I can't believe I saw that. But the fact is, M2, I guess, matters. We had a pandemic, and now we're clearly having some form of anti-transitory move. Is there more to come, and can you and Deutsche Bank model out wheat, model out oil, etc.?
Look, I think there are a few different factors behind this inflation story. The most obvious one was the supply chain bottleneck story. That was a story that permeated, came forth in March of last year. Behind that, I think, was the idea that there was a huge monetary overshoot that was essentially allowing prices to go up across a wide swath of the economy. And then we've actually seen now. In addition now, you have the commodity price implications. So that's effectively another supply shock, a different supply shock. The first one was manufacturing chain related. This one's commodity related. I think the problem, of course, you have is that if you thought things were transitory in the first instance, obviously that hasn't come to pass. You've hoped, I think, that inflation would be under control by the end of this year. You've got a commodity, and that's dampened those sorts of expectations as well, and meant that inflation is much more entrenched in the system.
How much further does this euro weakness have to go, Alan?
Yeah, good question. I mean, obviously things are changing pretty rapidly as we talk. We've broken some pretty key levels. DXY yesterday, I think the 97.80 level was important, targeting 100 on DXY. On Eurodollar, the most natural levels are sort of the 107.80 or thereabouts is I think the next target. Were it to break to lows that we haven't seen, since, before 2020, before the COVID era, that would be below 106. I don't think that's going to happen too easy. I think the euro's traded quite impressively, in part because people anticipate a large fiscal stimulus, in part because I think you are still getting safety flows from countries like the CE3.
Do you buy the idea that David Fochert's-Landau put out there that the ECB should intervene here by saying that they still are considering raising rates this year to support the euro?
Yeah, I mean, it's an interesting one in terms of, just trying to get the policy mix right. I think, the interesting angle there was, whether they could still raise rates, get rates above zero, which I think is ultimately going to be a helpful phenomenon from an economy standpoint, but at the same time, suppress the negative growth implications by doing more QE and effectively keeping long-term rates lower, and that thereby sort of helping the periphery in particular. So it's really, I think, a story of trying to get the right balance between short-term rates and long-term rates.
Alan, I just wonder, just to wrap things up, before the Fed starts hiking, once they do start hiking, we'll have rising interest rates at the Fed. We'll have a stronger dollar and a rallying commodity market. Do you think those three things can coexist?
Yeah, I think they can for a while. Unfortunately, I mean, you feel like the policy response to higher inflation that we were talking about earlier ultimately brings about a sharper slowdown and ultimately brings about a sort of stagflation environment. I think it's still too early to talk about, very, very soft growth, but I think that's the way that the main transmission from commodity prices onto slower growth and stagflation is usually by policy tightening. And the Fed's just going to have to deal with, what is an increasingly problematic environment here. I mean, you're dealing with growth slowing and inflation going up. I mean, and even if inflation starts slowing, it's going to slow by less than expected. So all the second derivatives are not really working in terms of making policy easy at this point.
It's tough, really difficult. Alan, thank you. As always, Alan Ruskin there at Deutsche Bank. Morgan Stanley came out with their call for payrolls.
So, gang, I just want to go over this again, gang. Let's look at the daily to see euro on the daily as well. It's on the 15. Let's go to the daily and see how far euro actually did drop. Let's just see how far euro actually dropped for the day. Wow, it dropped. Wow, from March 4th from 1.106 all the way down to 1.09, all the way down to see, I can remove this. Hide this event right there. Cool. It dropped all the way down to 1.08855. That's pretty of a big drop. It was all the way at 1.10 all the way down to 1.08. That's a big drop. And they were saying, we haven't seen this since the beginning of the pandemic, the beginning of COVID, in 2020. So, gang, as you can see, we haven't been down here since May of 2020. May 17th, 2020. We haven't been down this low since May of the beginning of this pandemic. And now coming into 2022, we're finally back down here. You can see gold could get down to, it's at 109 right now. It could head down to 108 and eventually 106, 107, 107, 106, May 12th. This is in March 2020. March 16th, March 18th, 2020. So this is just like, March 18th, it's right there, it's March 6th, 2020. So we can see this move happening. We can see gold, it's at 109. It closed at 109,295. The market's closed right now. And we could see gold, we could see euro heading down to 1.8, eventually 1.7, and eventually, if it wants to, it can get down to 1.6. And we've been down here. The last time we was down here was March 19th, 2020, March 18th, March 17th, 2020. So I just want to keep you updated with that game. We haven't been down here since March of 2020, since the beginning of this pandemic, and now March the 6th, 4th, we can go back down to 107, 106. So I'll keep you updated again. I just want to go over fundamental news, and I'll keep you updated. All right, gang.